Mr. Bikhchandani, fantastic to have you back on ET now. It's the first time I'm actually interacting with you after you got the award, so congratulations. It's a
Thank you so much.
I'm sure it's a very proud honor for you to get the award from the President of India.
Thank you so much. Thank you so much for inviting me.
The question, Mr. Bikhchandani, is that you understand the startup valuations more than anyone else. While some of these businesses are great, they are relevant, they will continue to grow. How does an investor go about investing in them? What is relevant for a customer may not be relevant for a shareholder. Let's discuss and debate that. How does one go about understanding the valuations of some of these new tech companies? I'm not calling them startups, sir, because they are no longer startups now.
Sure. Well, look, I really have never operated as a flipper or a short-term trader. I think when you invest, you should look at investing for the long term. If you look at Info Edge, the company where I work, we offered the share in 2006 at 320 rupees. Just prior to the global financial crisis, it had peaked at 1400 rupees, in other words, 4x. When the crisis hit in about 6-8 months' time, it had gone down to 25% of its original of the peak value. It was still above IPO price, but only just. And since then, it's sort of in a stop-start manner has been climbing. Over 15 years since we listed in November 2006, the share started trading, the first week of November. To now, that's exactly 15 years almost. From the IPO price to now has been roughly 80x return. So many of these tech companies have got very good long-term prospects. Immediate euphoria may push the share price up in the frothy market beyond its intrinsic value. If there's a crash, it'll go way below, but then it'll come back up again because there's intrinsic value. So I would study intrinsic value, and I would set a long-term time horizon, and only then invest.
Are you a big votary of the importance of profit and cash flows? Do you think that is an important prism which needs to be analyzed? They may not make profits in this quarter or next 2 or 3 years, but ultimately, if any of these businesses do not make profit, it would be difficult for a long-term investor like you to invest in them?
No, all businesses have to make profit eventually. That's why they're set up, right? Ultimately, you are priced off an earnings multiple. In the long run, you'll be priced off an earnings multiple. And of course, growth plays a part, so earnings and growth. Now, the question really is, can you postpone earning of profit and prioritize growth? And if so, for how long? And maybe that's what the market requires today. Maybe that's what the market and investors are rewarding today. Which is why you're seeing some of these companies who are coming out, although they're making losses, they're trading at very high valuations. These are real investors who have subscribed. I mean, if Zomato was subscribed to 38 to 40x, these are with 75% of the issue being subscribed by institutional investors. And these are smart investors. They think deep and long before they make a commitment. Or let's say if Policy Bazaar has got a 30 to 40% pop on the third day, there's a reason, right? And I'm not talking about retail HNI investors. I'm talking about institutional investors who continue to support these companies. I'm talking about the fact that Info Edge itself has not sold. Because we believe the long-term story about these companies.
Yes, please. Okay. So do you think the right way of looking at these businesses is that don't look at FY22, FY23, FY24, just look at the growth then, and then you should extend your time frame, because at some point in time these companies would be profitable? Do you think for those who are investing in startup IPOs, I'm talking about not the private market, that's a different bottle of game, the public issues, the public market, one should ignore the fact that they are loss making, and as long as you're ready to increase your time frame from 2 to 3 years, these companies would be very different?
So let me put it this way. I will look at 3-4 things. Number one is quality of management team. Number two is competitive position in the market. Right? What's the market share? Is it a network effect business? Right? On both these, Zomato and Policy Bazaar score very well. Right? And then I would look at what's the long-term market size and what's the addressable market. In both these cases, it's very, very large. And therefore, I would, if it's a 10, 15-year time frame, I would probably invest.
The big change, Mr. Bikhchandani, is that the regulatory laws in China have changed. A lot of startup IPOs do have global investors. Some of them do have funding coming from global PE players. They are coming from banks like SoftBank and financials. Given that how the regulatory environment in China is changing, could that have an impact on valuations? Could that have an impact on funding? Because ultimately, when you're valuing some of these companies, you're using a global benchmark, and that global benchmark, in a sense, was coming from Chinese fintech and internet companies.
So my submission is that, and this is anecdotal, what I've heard, is that a lot of asset prices today in India, whether in public markets or in private markets, whether new IPOs or even older shares, a lot of that is happening because of the excess liquidity coming in from overseas. And $4 trillion makes everybody look smart. And that, I think, has made a huge difference, whether we like it or not. And yes, there's money being diverted from China into India. So I think nobody's benchmarking these companies globally right now, or very few are. It is a lot of it liquidity driven. But look, if you look at Info Edge, our share price was 2,200 rupees approximately, maybe 23, 21. I forget the exact number, in February 2020, right? Since then, it's about 3x. Have the fundamentals improved 3x, or is it liquidity? And if it's liquidity, has a big role. If liquidity has a big role to play in it, it will impact everybody, including the IPOs. I mean, maybe even more. Have fundamentals improved 2x? Maybe fundamentals are improved, but is it 2x? I don't know.
Hello, Mr. Bikhchandani. So, as everybody hunts for, should I say, the next Zomato, the next Policy Bazaar, the next Nykaa, Paytm obviously has not had the day one, the listing, the market debut that Vijay Shekhar Sharma always dreamt of, has talked about many times in the past. I've seen you interact with him publicly. I've seen exchanges on Twitter as well. If you were to speak to him today and to the team at Paytm, what would you say? Because, whichever way you look at it, a founder has worked for so long, almost went bankrupt. Look at the way he managed to stay afloat and then get some of the best investors at the marquee table. And the larger message from Paytm for the startup ecosystem.
No, I think Paytm, look, my advice will always be hang on in there. There have been great companies which had problems in the IPOs, but if the fundamental business is sound, they bounce back. And the bounce back may take a few quarters, but it happens. I mean, I believe I don't have personal recollection, but I've read that the Infosys IPO had a problem in 1993 being fully subscribed, and it just got made it past the finish line. The Facebook IPO, more famously, went to a fraction of its offer price a few months after the IPO. And both these companies have become great companies. So it's not the end of the world. If the focus on executing, focus on the underlying business, and if you execute well, the share price will come back.
And so you're comparing the Paytm IPO with that of Infosys as well as with what happened with Facebook on Wall Street. So I'm assuming that you think that its fundamentals, its business model, etc., all of that is sound. So do you think it was maybe a case of not leaving enough appetite on the table for investors?
I would not want to speculate without having full information and knowledge. And truthfully speaking, I have not really studied the Paytm fundamentals. I only know Vijay Shekhar Sharma as a good entrepreneur. He's a very good entrepreneur. He has faced adversity in the past and bounced back. He came from a very hard place growing up. When he went to engineering college, he didn't know English. He had somehow cleared, he knew numbers. He did not know English. and he had to learn English in college. And from that background, from a rural background, from a very, very economically, a family of very modest financial means, he has made it this far. There is something he has. And that quality, I think, will come forward and he will execute well going forward. I am hopeful.
Telling VSS in the morning, Sanjeev ji, that sapne dekho to Hindustan mein dekho aur Vijay Shekhar Sharma jaise dekho. I mean, he has made an unforgettable brand from an unknown company to an unforgettable brand. I mean, it is truly inspirational, that kind of an entrepreneurial journey. What happens in the market, I'm sure we both know that is a function of demand and supply. But my next question to you, sir, is, and again we are referring to public market. The general view is that when Infosys went public, it was the beginning of a new cycle. When HDFC went public, it was beginning of a new cycle. And if you bought into some of these good companies when they were young, they turned out to be great wealth creators. But that may not be the story for some of the new internet companies. When they're going public, the average market cap is north of $10 to $12 billion. And they are actually giving exit to PE investors, which means if you participate in them and even if you get the company right and the business right, your chances of making great returns may be very modest.
All this beginning of cycle is all hindsight. I want to know how many analysts called it a beginning of a cycle in 93 when Infosys went public. How many called it later on when HDFC Bank went public? ये सब hindsight है. We will know, we will know 10 years from now or 15 years from now whether this was or was not a beginning of a new cycle. It's very hard to read the tea leaves right now and say, hey, it's not a beginning of a new cycle.
For someone who's identified the original unicorns of India, and when I say original unicorns, Zomato, Policy Bazaar, what do you make of the number of unicorns which have got created this year? 34 unicorns, and across the board now, from a food delivery company to a fintech to a SaaS company to a meat company. You use the word liquidity and ease of money, but is that the reason why we are seeing so much of unicorn taking birth?
What I always tell young entrepreneurs, don't focus on valuation, focus on just building value. Valuation is something the market gives you. It's a consequence. It's a consequence of many things. Number one is your company, your underlying, what kind of company you have. Number two is liquidity. Number three is sentiment. Right? Number four is geopolitics, which again impacts liquidity. If China is out of favor, then more money comes to India. So what's not in your control, don't bother about. Focus on what's in your control. Your customers, your offering, how well your business is performing. Valuation is something that the market gives you or doesn't give you. And if $4 trillion liquidity had not happened, would we have had so many unicorns? That's a point to ponder.
I like that one. Founders must focus on building value and not valuation. And in fact, that was also a moot point of what Vijay Shekhar Sharma was telling Nikunj soon after the listing, saying, I focus on my customers and that is the most important thing. Sanjeev Bikhchandani, we're also in completely uncharted territory. The new listed companies, as they grow bigger, they're clearly becoming more ambitious. They're more agile, they're nimble-footed, and we've seen that recently with Zomato, which is wanting to invest in other companies. The market regulator is also seeming to get concerned, wanting to tighten the news, wanting to have quarterly updates on how IPO proceeds are being used, whether there should be a cap on M&A activity. Is this the way to go?
Well, look, obviously, if there's a law, it must be followed. It has to be followed. And I'm pretty sure SEBI is, got some good reasons why they're thinking of these rules. So we'll wait and watch and we'll see what rules emerge. And then obviously we'll all have to follow them.
Mr. Bikhchandani, but I also want to ask you, because we've seen so many oversubscriptions, and we must remember we're in the midst of a bull market, and it looks all hunky-dory in the middle of a bull market. But today, see what has happened. A quick reminder for keeping the retail investors' protection on top of mind. Where do you stand? Do you think it's time to increase the retail quota as so many more startups head to the Lal Street? Our next wave will have delivery, it's going to have Oyo, Ola, Byju's, Farm Easy.
He's got it right. If the company is loss-making going public, I think 75% institutional is good. Because see, institutional investors are discerning investors. They do their research, they do the homework, and then they come in, right? You don't want retail investors who perhaps do not have access to the same research or the same ability to analyze, going into something and then getting hurt. So I think institutional investors, a higher percentage in loss-making company IPOs is a very good idea. It's a good safeguard to prevent retail investors from getting hurt.
Mr. Bikhchandani, Indian capital markets are, in a sense, right, fair point, sir. My next question is, this is Nikunj again, that Indian capital markets, they demand a quarterly update. That is what it is. Every quarter you have to give an update. Your P&L is scrutinized, your quarterly numbers are scrutinized, there are analyst calls. Now with some of the startups or some of the new internet companies, they in a sense have not been accustomed to get this kind of an scrutiny done. Do you think Indian markets or Indian public markets are mature enough to handle some of the companies? Because in some of the new internet companies, there are acquisitions, there are write-offs, there are investments. There would be a completely different accounting and different communication which may vary quarter on quarter.
No, well, the accounting standards don't change, right? Your results might change, but the accounting rules, norms, standards don't change, and they should not change. I think the fact that they have to give quarterly numbers is a good requirement because it gets more transparency and investors can then make more informed calls. But look, I do think institutional investors are mature enough to handle this because they've seen it globally. And they will go deeper into the story. They will analyze, they will ask questions, and then they will produce their models and then figure out if they want to stay invested, buy more, sell, whatever. So I think it's fine. The system is currently fine. I think Indian markets, especially institutional investors, are now mature enough to handle this.
I'm going to phrase my next question rather carefully. Do you think in the Indian startup IPO market currently there is an overvaluation, there is a euphoria, or there is a bubble? Because if there is an overvaluation, a correction will kick in, they will stabilize. If there is a bubble, there will be a meltdown.
I don't believe the tech IPO markets are any more overvalued than the broader market. So if there is liquidity, there's liquidity everywhere, in the older shares, in the IPO shares as well. So if there's a correction, there'll be a correction everywhere.
Such a great point, sir. While we are talking about IPO market and euphoria and fraud there, every brokerage, every large global brokerage, and this, I'm bringing this point out for our viewer, from a CLSA to a Citi, from a Macquarie to Jefferies, they're communicating to their global clients that India is trading above its mean averages. It is time to take some chips off the table. Mr. Bikhchandani, I'm going to turn the conversation to yes, older shares. They are, of course, looking at the Sensex valuations and they are looking at historical averages. So they are looking at older shares because new shares do not have that kind of an history.
Yeah, therefore, this business of the stock of valuation is not just applying to IPOs, it's applying to the broader market as well.
So is it a tough time to be an investor? Because A, there is liquidity, B, there is a bit of a froth which is getting, which is there. Is it getting tough for you to find the next Zomato or the next Policy Bazaar?
Actually, we invest early stage. We are the first institutional check-in, and therefore we are very, very far away from public markets when we go in, right? And is there competition there? Is that competition among investors increasing? Answer is yes, it is. But also outcomes are larger given where the public markets are. Market sizes are larger given the internet and smartphone penetration in India and and how much the Indian economy has grown over the last couple of decades. So markets go up, markets go down. You got to keep investing. And when markets are frothy, you got to be a lot more discerning on what valuation you're going in at and how much money you're putting out. I am not an expert public market investor. I'm not an expert in public markets. We are listed, so I know a little bit about how some dynamics play out. Zomato policy are listed, so I know a little bit about how some dynamics play out. But otherwise, we're not experts in public markets. We know a bit about very early stage investing in private markets. And there, I would say competition is increasing, valuations are increasing, round sizes are going up. But that's natural when there's a lot of liquidity.
Last question. Sanjeev Bikhchandani is a billionaire investor. How easy is it for someone who's got a great idea to approach Sanjeev Bikhchandani? How can one approach? I'm asking this question perhaps on behalf of our viewers, and we'll put it on internet. If somebody has an idea, how does one reach you?
Or send an email. Very simple. I'll connect with a little bit of information about what you're doing, and I'll connect you to the team. And my email ID is sanjeev@naukri.com.
That's an easy one to remember. Thank you for sharing that, and thank you for your valuable thoughts. We almost at 3:30, no markets tomorrow, so I'll toss it back to Nayantara because it's a market close which we need to capture. And Nayantara, we may talk about Paytm as an inspirational story, but unfortunately it's turning out to be the best of the IPO. In fact, it has slipped more than 25%. That makes it one of the worst IPO debuts by any company of any size on the IPO day.